is it unusual that some banks are making their customers wait up to 3 weeks for the RBA's rate cut to be passed on?
Actually, not at all. Often it can take even longer for banks to pass through the rate cut. They get an extra bit of profit by waiting to deliver the rate cut, particularly if they start passing through to their deposit rates faster.
Okay, and so do you think that will be a specific consideration for banks in a falling rate environment?
Well, it's very much the case in a falling rate environment that the longer they can hold their mortgage lending rates at a high level, the greater the profit they make. And so a delay of a few weeks can be worth quite a bit to them. So we often do see in a falling rate environment that banks will delay in making the rate cut.
Jonathan, you worked at the Reserve Bank for decades. Did today's wage price index provide further information into what we learned yesterday about the state of the economy and how many more rate cuts might be ahead?
Well, I think it actually adds a bit more of a puzzle, because one of the things that the Reserve Bank has been musing about is that the labour market remains quite tight, and that's something that the Governor emphasised yesterday. But despite that, we're seeing wage growth slowing down. So it's leading to quite a puzzle, and that's something that the Reserve Bank's got to resolve. It's thinking of, is it that the equilibrium rate of employment, how much employment we can have without inflation being pushed up, is that lower than what the Reserve Bank had been thinking? And if it comes to the view that it is, then we might be able to see more rate cuts.
Okay. And do you have a view on how close the labour market might be right now to that point?
Well, I think it's probably still below that sort of equilibrium rate of unemployment. So I think we probably still do need a little bit more of an increase in the unemployment rate. The Reserve Bank is predicting that the unemployment rate will only rise to about 4.2%. I would be surprised if that's enough to get inflation back to a sustainable level. I would think that quite possibly the unemployment rate needs to head just a little bit higher than that. I think we are in for seeing the labour market slow down a bit more if we're going to get inflation back to target.
So, Jonathan, what does that mean for the timing of the next rate cut?
Well, I don't think we're going to be getting another rate cut anytime soon. I think it could be quite some time off, possibly not even until the second half of the year. What we should really be thinking about is this is more likely to be a bit of a pause, and it could be an extended pause because the conditions in the economy are actually still quite good. There is a lot of strength in the labour market we're seeing. We're already seeing some rebound in household spending, and we've got very strong public demand as well. So there is quite a bit of strength in the economy, which means that the likelihood of inflation slowing sharply is actually pretty low.
So you say we might not get another rate cut until after the federal election. Do you believe the banks will be as keen to announce they'll pass it on in full when it does come?
It may well be that after an election, if there's less focus on the banks, that they could delay passing through a rate cut even more than they have this time round. I think the banks were very quick in coming out to announce that they were going to cut their rates. They, of course, delay when that actually takes effect for a little bit longer. But particularly in the current environment, I think the banks were keen to announce that they were going to cut rates.
Jonathan Kearns, thank you for your time.
Thank you.